Episode 10 of Punch Card Investing is now live. We made it to 10, guys, and all of us are here for episode 10, so fantastic. I know it can be difficult to coordinate with our worldwide time zone struggles that we've documented on the channel before, but great to see everyone. Today we got a special topic, speculative investments, but before we dive into that, want to make sure to remind everyone to smash that like button, smash the subscribe button, check out the Discord in the description below. If you haven't already joined that, we got well over 100 people in there now talking about value investing topics, just as we do here on the live stream. So if you can't be here for the live streams and the live chat, you can always carry that conversation on into the Discord if you want to do that. But otherwise, let's go ahead and dive into speculative investments. What sort of place do speculative type investments have in a portfolio? And when I say speculation, what I'm really referring to is something that maybe isn't really rooted in fundamentals, but it maybe has higher risk asymmetry. You're betting on, I don't want to say a feeling, but there's not a lot underneath the position itself. You're making a bet on something having higher growth in the future, even if it might not make total fundamental sense right now, which inherently all investing has a bit of speculation caked into it, but really talking about the more extreme examples where there just really aren't many fundamentals to go off of at the moment. Who wants to kick that off? Since in the value investing space, it tends to shy away from a lot of those speculative type investments, momentum swings and that sort of stuff. Love to get your guys' thoughts on that.
Maybe Frank should go first. We were chatting a little bit just before we went live about some of the early investments. Do you want to take it away, Frank?
Yeah, I'll go for it. So obviously I try to avoid speculative investments as much as possible. But early on in my investing journey, maybe 5 or 6 years ago now, I held a lot of ETFs, and I had about 50% of my portfolio where I was pretty much purely speculating. But that was mostly out of the fact of just not being an informed investor whatsoever. It was all I knew what to do at the time. I eventually shift back to completely ETFs, which I guess if there's a spectrum is the opposite end of a speculative investment. It's probably the most risk-free you could get unless you went into something like bonds or something like that. And then more recently, since I've been running a concentrated portfolio, I have had more speculative investments compared to others. I wouldn't call them speculative. The number one being probably Seritage Growth Properties, which obviously for you guys you might not see as a speculative investment, but at the time I made it, I really just didn't understand the business well enough. So I was in and out of that trade pretty quick. I think I only held it for about maybe 2 months. And I kind of made the investment as a somewhat clone, I guess. I had done a little bit of research, but the more research I'd done, the more risk I felt like there was. So I exited that trade pretty quick. And then I guess even now in my portfolio, I hold Redbubble, which is, I don't find it a speculative investment, but it's towards the more speculative end where there's a lot of execution that really needs to take place. It's not a no-brainer like something like Kelly Partners Group was when I made that investment. But overall, I guess it's something I am just trying to avoid completely. But I'm always willing to allocate smaller positions in my portfolio to something a little bit more towards a speculative scale, if that makes sense.
So the way you see it is the higher growth expectations are, the more speculative that is. Whereas if it's something maybe more certain, or I mean, nothing's guaranteed, but something like a bond, like you mentioned, that would be towards the opposite end of that spectrum, right?
Yeah, I think partly to do with predictability. Like if I can see a company's going to grow at 5% each year for the next 10 years, and it's been doing that for the last 20 years, I can't think of an example at the top of my head, but there's investments like that. Whereas some of the positions I hold where they're earlier in their early stages of a company, and really it's hard to predict the growth moving forward. It's hard to know what kind of cash flow they'll be able to generate. I even make some investments in companies that aren't profitable yet, so I guess I am speculating that they'll be able to achieve these types of earnings numbers and the margins and everything else. Whereas you could go the opposite end and you could have a company that's had 20% margins for the last 20 years and they're probably going to keep it that way. so you can kind of see that growth moving forward. They might even have a backlog of revenue or contracts coming forward, so you would know that they can continue to do that. Something like Huntington Ingalls, like Phil Town has invested in, is a good example of that. They've kind of just grown slowly over time at about 3 or 4%. They have a backlog of revenue that they can eventually dig into, so they'll probably keep growing at that rate, and that's typically a blue chip type investment, I guess, where they probably end up paying a dividend. That's on the more predictable opposite end of the spectrum.
But I mean, with anything that has a lot of growth projected, you're probably going to discount it. I know you are discounted more heavily. I know you run with, I think, the 15% discount rate is your target generally, Frank. And the more speculation you have in there, you're kind of counterbalancing it with a discount. Look for a higher margin of safety or something like that. Is that right?
Yeah. So in any speculative, it's really not on towards the Bitcoin end of the scale, I guess.
Sure.
But, I'm looking for a margin of safety and I'm discounting it back over time. So I'm always trying to have some type of safety to that bet, no matter how risky it could be.
Isn't it funny how the how wide ranging how we each define speculation is? Like when you say speculation, people are thinking like Bitcoin. I saw we had a comment like AMC short squeeze, or piling into GameStop just purely because the price is going up. And here's Frank, and I would largely have the same answer, that I would define speculation, when I have to invest in a company that maybe has to grow 15% a year to get a good return, and it's done 18% in the past, and I don't know if it quite can sustain this growth rate and that sort of stuff. It's interesting.
Maybe the word for it is just uncertainty. It's investing with high uncertainty, and to counteract that high uncertainty, you'd want something that has high risk, high return asymmetry. Like if it does pay off, you'd want it to be high. At least that's how I would look at it. And uncertainty seems to be the common denominator for all of us. In that maybe it's not based on fundamentals, or they just really need to produce. And there's more risk because they have to hit those growth projections or something like that. But uncertainty seems to be kind of the thread in all of this.
Yeah, I think. You go, Brad. You're probably going to say the same thing I was about to say.
Probably. So I think you could have a very uncertain investment and it still have a high margin of safety. Because the uncertainty is already built into the price. So it's, I like what Howard Marks says in terms of, he's going into these junk bonds, right? That's kind of how he started his career. And he was shopping there because the market didn't really understand that you can have these things that seem really high risk, like very low rated bonds. But if the price is low enough, they can be very safe investments. So that's kind of how I see it.
I guess an example of a company that I'm looking at right now that involves a lot of speculation as part of the investment is I'm looking at Blackstone Minerals, which is a mineral rights company in the US. I posted a video about this recently. Karan and I were talking about it as well. But a lot of it, I guess, would be on the safer side. Like they have essentially these assets or these mineral rights that really you're going to get your capital paid back over time through dividends, almost guaranteed, even if they stopped pulling oil out of the ground right now or stopped leasing out any more land. But to do well in the investment, I'm speculating that the oil prices and the natural gas prices will be higher in the future. So that, in a sense, is complete speculation because I really don't know. So I can try and be conservative, and in some of the assumptions I make, I take very low historical averages of both natural gas and oil to value the company. But for the investment to do well, I would need that to be higher than average. So that complete speculation if I did make that bet.
So it sounds like what you're saying, the upside is a bit speculative, but you feel that your downside is protected. Am I getting that right?
Yeah, downside completely protected, but the upside could be very, very low. But if everything plays out well, maybe it could be some type of inflation hedge, prices go right up. It could turn up with a huge upside as well.
I think you brought up a very relevant issue with speculation in talking about like commodity prices. I think the more macro related the investment gets, inherently the more speculative it is, because there's so many things that affect like macroeconomics, macro whatever, large economic movements, that it's very hard to predict them in the short term, and even to the medium and long term, very hard to predict those. Probably a lot more than, say, looking at how a business is operating. You can make very concrete changes that are probably going to have a high chance of fixing it or improving returns or something like that. Whereas with something like any sort of commodity-based company, it does ultimately rely on commodity prices, and so much goes into that is inherently speculative.
Mm. Yeah, I would argue that investment you just described, Frank, is not speculative. That like if your downside's covered and it's the upside that you don't know, I don't think that's speculation. Like I just quickly looked up the old Ben Graham quote of defining an investment, and he said, an investment operation is one which, upon thorough analysis, promises safety of principal and a satisfactory return. Operations not meeting these requirements are speculative. So I would say if the downside's covered, then it promises safety of principal, and that kind of takes care of the upside. So therefore, it's not speculative, but interested to hear the rest of the group's thoughts on that.
Yeah, even if you go for the low-cost producer, that makes a big difference. So especially like with Blackstone, they've got like a separate deal with the rights. So I don't see it as speculative.
Yeah, I guess the overall investment is not speculative, which is why I'm probably interested in the company anyway. But that one aspect for it to do very well, relying on a commodity price, which I guess is speculating. So part of your valuation, you have to speculate slightly, but you are right. If the downside's protected, which I believe it is, I've still got to do more research before I'm convinced on that, then it's, I guess, the opposite.
Yeah. Do you guys have anything that would fall into the basket of probably what most of us would call pure speculation, like Bitcoin? Or I know, Jack, you have some small crypto holdings. How do you think about that?
I have a very small amount. It's no more than like 2% of my net worth in any sort of speculative investments. That's what I'm comfortable with. And the reason I did that, it does, I think it totally fits that Ben Graham definition with any sort of crypto, in that the bottom could completely fall out and my capital's gone in that case. Mm-hmm. However, I think it's enticing enough that what I understand the ceiling could potentially be is actually pretty significant. So the risk asymmetry that we've mentioned a couple times is enough to get me in, but I'm not going to put 50% of my portfolio or more into it, just because that would just come off as pretty reckless, in my opinion. Mm-hmm. You could say the same thing about using a lot of short-term debt on things, using a bunch of margin. You're inherently getting pretty speculative in the short term, since you could be triggered with a margin call and then you're out, even if your underlying holdings might have pretty solid fundamentals. You never know what's going to happen in the short term, even with great companies or great investments, whatever it is. So yes, I do have a very small amount of crypto, and I'll keep adding to it if there's something else that seems more enticing than that. I guess you could kind of consider some of my commodity holdings kind of speculative. However, it's pretty well diversified basket of metal producers of various metals, gold, copper, uranium. And that's more of like a inflation hedge, intermediate term sort of move. And it's sort of along the lines with what Frank was talking about. It's pretty speculative, but the bottom shouldn't completely fall out unless something crazy happens with monetary policy, which I don't see in the opposite direction where I think it would go. So that to answer the question, that's what I got going on, and it probably would never grow to much more beyond that unless something really magical happens with that speculative holding.
Out of curiosity, do you have strict rules about maybe trimming that if it was starting to be a larger weighting in the portfolio? So if you say put 2% towards Bitcoin and become 10%, are you going to trim, or how do you think about that?
The way I look at, so with Bitcoin, I see its best case. It could go well beyond this, but my target price would be something like the market cap of gold, which is 10 trillion. And I think it's about a 10x away from now. I don't know what the market cap is right now, since it's been swinging so violently over the last couple months. So if it 10x'd, that would mean it would be, well, it wouldn't be, I don't know how that would work exactly, but if it reached that price target, I would definitely sell, and I might sell on the way up. I'd reevaluate it there, see what's going on with that space, since it's so uncertain it's kind of hard to say how I would act if fundamentals actually came into play. Right now there's just not a lot of fundamentals with it, and if something were to change fundamentally with it, then the thesis might change as well. So I'd have to reevaluate, but my current target would be something like a 10x from here. If it gets to that, I would definitely be enticed to sell unless there's something that says not to.
Are you guys familiar with MicroStrategy?
Mm-hmm.
Have you guys heard about it?
Is that the Michael Saylor's company that owns all the Bitcoin? Yeah.
The guy who's borrowing, who's taking on debt, who's basically leveraging his company and shorting his own stock by selling equity in order to buy Bitcoin.
If I'm not mistaken, it might have changed, but for a while, when he announced that the company was putting basically everything into Bitcoin, the stock shot up, but it shot way beyond what the actual value of the Bitcoin was. So that you're paying a premium for the Bitcoin in this company, basically. And the company itself wasn't anything spectacular. I don't even know what they do, actually. So
business intelligence software.
Yeah,
I looked into it.
Yeah.
Well, you're paying a premium for that leverage, right? Because it's kind of a juiced,
guess so.
Yeah, a juiced instrument.
I think even before that leverage, it was the premium was so high that it you might as well just buy Bitcoin straight up. It just doesn't make any sense. You're getting zero discount, but people aren't really looking into fundamentals when it comes to speculative investments, and you run into trouble there. I don't know if that's still the case now, but it was that way.
Yeah, I forget. I'm completely blanking on who it was, but it was someone that was on Toby Carlisle's podcast the other day. Was talking about if you're into crypto and you also happen to be a value guy, which is probably a rare breed, there's actually a surprising number, or like a growing number, of nets that, if you consider their Bitcoin holding, which was kind of like an interesting idea that I hadn't really considered before. Of course, you got to bank on Bitcoin prices staying like roughly where they are or higher than where they are now. But there's a few of those floating around. So I'm sure if you were wanting to get some exposure to Bitcoin, there might be some cheaper ways to do it. It kind of reminds me of this is a bit of speculation for you. I'm sort of guessing from some of Moj Pabrai's recent talks that he owns Tencent through Naspers in South Africa. It's kind of like how he's buying Tencent, or how I think he might be buying Tencent, but doing that in the Bitcoin space. Any thoughts on that?
In that case, yeah, it's like your typical asset play. You're a cigar butt of sorts for Bitcoin.
For
but
Bitcoin,
yeah, again, but again, there's nothing. There's so little holding it up, other than hodlers, which who knows how quickly that could change. Since it's not producing anything, it's supposed to be a currency, but at that it's a digital currency, so it's not even a thing. So it's very difficult to value. That's why when people say it's undervalued, it's overvalued, it's like, well, can you really say that? Because I don't think it has a set value at this point. Because it's so volatile that there's a lot of price discovery going on with it. Maybe it is worthless, maybe it's not. So that's what makes it super speculative, because it doesn't have much history. It doesn't have any sort of fundamental backing. It doesn't have a company throwing off cash flow. So I guess you can kind of say that about a lot of currencies. That's fiat currencies at least, which is almost all currencies, in that it's all based on faith and trust. Which is pretty speculative if you think about it. Like, how permanent is trust? And you can kind of say the same thing about a lot of cryptos, at least the more long-standing ones, compared to some of the straight-up pump and dump schemes you got to watch out for.
It's a bit of a network effect to something like the US dollar.
Yeah, yeah. I'm not saying it's inherently like, oh, this is get rid of all your dollars, burn them right now. Like, no, but it's not a company. It's not producing anything. It's a currency. Yet people put a lot of faith into it, and maybe rightfully so, maybe not. The world of fiat is very strange.
Yeah,
that Bitcoin thing throws me off with the net. So I'm just trying to think about if I think it's a good idea or a bad idea at the moment. But I know
I think it's a bad idea personally.
Probably, yeah. So with nets, like, you look at a thing called net current asset value. Some people take it a step further and look at net working capital, which essentially puts less weighting towards some of those current assets. So cash, you would count all of that, and short-term investments. But then you only take 75% of accounts receivable and 50% of inventory to then calculate that same equation.
You're just discounting it, right?
Yeah, but in that rule, I think Bitcoin still comes under a short-term investment, so you're still counting that completely. So even if you're using that more conservative formula, you could fall into that same trap.
Yeah, it's an interesting thought experiment. Like, it sort of makes me think, if I was some like corporate raider, can I take over a handful of these companies and just liquidate their Bitcoin immediately and you get out again? I don't know, or wind the thing up. I'm not sure.
We could go activist with the punch card investing.
Acquiring small Bitcoin holding companies.
Yeah, let's raise some money, guys.
By the time they get in, do the raid, the price of Bitcoin might just fall and the raid's worth
Exactly. That's a tough one.
Yeah.
Then you got to double down.
This guy, like Saylor, his debt is oversubscribed. Like, he was raising 400 million people, I think, put up to, 1.2 billion. Yeah, so
just for Bitcoin.
Ridiculous.
What's the rate? What's the rate on the debt?
6.25 something, 6.25% for 8 years. Yeah.
Wow.
And one of the investors who got in is Bill Miller. So.
Yeah, you mentioned that.
Yeah.
I see Stan Druckenmiller in the comments there. Have you guys seen Stan talk about Bitcoin, his purchase of Bitcoin?
20 million, right?
Yeah. Yeah.
20 million.
And he wanted to buy more.
He wanted to buy 100 million.
And I know Dalio did it. I think Dalio just did it. He's master of diversification. So it just seems natural that he'd have something there because the space is getting so large. It has no intrinsic value. You could say so. It has like very limited, not very good use case right now. Maybe that'll get better as the network grows, but again, it's pretty speculative whether that actually happens. And of course, there's always a chance, which Dalio has talked about, that Bitcoin's success is its biggest threat, because that could be something that governments don't like. And sure, they can't stamp out the blockchain, but they could certainly discourage the use, and then there goes a lot of value right there. And there's just a lot of risk factors that go with it, and not much in the way of fundamentals at the moment.
Would you guys say that Bitcoin has more or less fundamentals than tulips?
Maybe digital tulips.
I would definitely. Okay, I'm going to say it definitely has more than tulips, unless you just love tulips. Yeah, cool. Like you get so much utility from tulips. But there's some promising stuff with, for example, something like Ethereum, like programmable money. You've seen the NFT craze. You've seen the stupid parts of NFTs, but there's some value there in being able to track things, like automatically add royalties to digital assets that then come with something real, like a membership to something. So I think there's something there for sure. Well, how that shapes up over the long term, that's what's super hard to say.
I mean, to be fair, you guys got to put yourself back. What was it, the 1700s or something? You're in Holland. There's tulips everywhere, and somebody figures out how to cross these tulip varieties to create these colors that have never existed before.
To create life.
It's magical. So, it's easy for us to poo-poo tulips, but
sounds like
I bet it was pretty cool. It sounds like an NFT.
I think it's more akin to like some of the NFT art that comes with nothing else but the art. Like, what? That doesn't make any sense. But you could say the same about a lot of fine art, frankly. But like quote unquote real art. Like, didn't an Italian guy recently sell a invisible statue? I saw that on the news recently. So I mean, like, it's kind of the same deal.
Well, I don't remember who it was when Frank was talking about Seritage and how, to him it might be a speculative investment. To Tom and I, it might not be a speculative investment. So it's interesting to think about Bitcoin through that lens. Like, are there people out there who understand Bitcoin so well and can really just see the big picture that it fits into, that it's not a speculative bet for them?
Michael Saylor, yes.
Michael Saylor. Take my money, Saylor.
Say what you want about him. Sorry.
No, you go ahead.
Yeah, his level of conviction is remarkable. He's willing to bet it all on Bitcoin.
It's been fantastic short term, just like for the brand, for raising money clearly. So can't really knock him for that, but definitely adding quite a bit of risk to the pie.
Gotta respect the conviction. Yeah.
Do you know if all of his own wealth is tied up, and that would be interesting to see. Like, how personally convicted is he with his money?
That's a good
versus
question.
just promoting his product.
I'd be kind of surprised if it was everything.
Karan
I
seems
know he's
convinced.
mentioned. No, I think he's mentioned that he's got like his grandkids, like money for his kids and stuff, everything in Bitcoin. So
Jeez.
yeah, something like that.
Crazy.
I'm sure.
But there's some very smart people that I have a lot of respect for that are in Bitcoin. Like Bill Miller is one, Preston Pish, who from the We Study Billionaires, the Investors podcast. He did a really good episode on Bill Brewster's podcast talking about Bitcoin. A lot of that stuff was just over my head, but he made a pretty compelling case. Nonetheless, maybe it's just because he used a lot of big words I didn't understand. I'm not sure, but I mean, there's some really smart people in this stuff, and even Preston Pish, who has definitely drunk the Kool-Aid. He's still, at least at the time of buying it, made it a small position in his portfolio, and he was thinking about it in a similar way to how you are, Jack. Looking at what's the market cap of something like gold versus what the market cap of Bitcoin was at the time. And it's grown, like I think he's up over 100x on his Bitcoin position. He was pretty early to it, made millions of dollars. But yeah, there's some smart people in it. So I think I tend to just bag it out of habit, really. But I could be very wrong.
What's given all crypto such a horrendous reputation in like a space like ours is there are a lot of scams, like an alarming amount of scams. It definitely has the aura of like a tech bubble within the crypto space where there might be some long-term winners. Picking which ones those are, that's what's like kind of impossible to do. And there's a ton of losers and some just outright cash grabs. And then you at the same time you have like the NFT craze where some of it might make sense and a lot of others don't within the NFT space itself. So that's what's really poo-pooed a lot of the crypto sentiment for people who might not understand much about it or just hearing about it for the first time. They see some crazy news article about something wacky that happened, be like, how on earth could that happen? And some of it is just flat out euphoria or just fraud, and that's no good. How to get through all that is what the whole market's trying to figure out. That might take years, might take months to get through all that, but it's going to be pretty nuts for a while, I'd guess.
Yeah, for sure.
You've got Elon pumping dough. Right?
yeah. Right now you have the czar of crypto on Twitter. Just one tweet will massively swing the whole market, 10% in a day. It's just crazy. Once that stops happening, then we might have a better idea of what's going to happen long term. But that could go on for a while. So
yeah, what stops it?
I don't know. That's the speculation. I have no idea. More people adopting it, the market cap growing, but
critical mass. Yeah.
That'd be the end game. Just having more people buying it, so it's less easily manipulated. That could take a very long time, or it might never happen.
We're slowly turning into the Millennial Money podcast right now.
No, we're not even
millennial
close.
money. I saw that Jeremy is being investigated by the SEC. Did you guys see that for pumping and dumping?
Is that real? What?
For what?
It was on his channel, I think. So.
Wow.
Which company?
Was it clickbait?
I don't know which company it was. Well, I know he pitches a lot of these penny stocks, right? And with the number of subscribers that he has,
wow,
he may be able to move markets in some of these illiquid, micro caps. So
I'm sure he could if he used it.
I
for
have
bad.
no doubt he can.
Yeah. Well,
that was interesting.
I did not know that. That's crazy.
Wow.
Yeah.
With great power comes great responsibility.
If someone with a large following like that chose like a very illiquid security, something like a $50 million market cap, they could change that price significantly.
Yeah.
If Jeremy or someone like that did that, I don't know what type of companies he's been accused of doing that with, but anything small, I definitely think he has a very large influence over.
Yeah, from what I've seen, he usually pitches, kind of mostly higher market cap tech stocks. He has a bit more of a fundamental lens than a lot of other channels, I will say, admittedly, to his credit.
Yeah.
But yeah, that's pretty nuts. That's serious.
I think Planet 13 could be
That's what I think
Not
it
sure.
might have been.
Yeah.
Yeah, I'm just
he's been-
trying to
he's been
figure out the
super
market
bullish on
cap
that.
on that.
We
The
shall
market
tune in.
cap at the moment.
We'll have to return to this next week and see what's going on. I need to look into
Mm-hmm.
this because that's an interesting development for sure in the
Yeah,
YouTube
give us-
finance realm.
I know you're
Because
a real
that-
estate attorney, Jack, but you'll have to give us your professional opinion on this.
It won't be advice, but I will put it under advisement. Yeah.
There you go.
It'll
Because
be
if he was
speculation.
charged over anything like that, I think it would heavily influence how YouTubers talk about stocks going
Oh, you
forward.
bet. You bet.
I know it'd probably change how I talk about stocks because I publicly, even being a tiny channel where I don't have influence, I openly talk about investments that I think are good ideas, which is probably not too different than what he was doing, to be honest.
Yeah.
Well,
I-
one thing I heard from Bill Brewster when he was interviewing Mitchell. What's his first name?
Mike Mitchell.
Michael Mitchell. Yeah.
Non-narrative.
Yep. He was saying, he was interviewing Kyle Sermonara, and he said he held a few positions that Kyle, was involved with, and he said he would hold for at least a year after that interview. So I think maybe that was some part of the, SEC, or just, being clean about the whole thing, not
Sure.
I
pumping.
like that, yeah. Yeah, I like that idea.
The weird part is you kind of have to be just 100% transparent all the time and show everything, or don't say anything. And eventually it gets to that point if you're encouraging people to buy something, which, as Frank was saying, especially in finance YouTube, you're at least towing the line constantly between advice and non-advice, and this will be a huge precedent for sure. If this is actually a serious lawsuit and this leads to something bigger.
Because I've personally taken the fully transparent route where even when I talk about my positions that I own, I'll always give a verbal disclaimer. It's always in the description, but I don't know how much value that has to it. I don't know if that's actually covering me.
It should have
any
something.
sense. You would think.
Well, I think Meet Kevin did it best. Don't sue me, bro, on his shirt.
Because he got into a bunch of lawsuits when he was first growing. But it wasn't really related to advice. It was
he was attacking
trispassing,
other
wasn't it?
channels, right?
Yeah.
It
it was more like
picking fights.
slander and trespassing at Grant Cardone's place. That was he had an interesting rise up. Dave Ramsey sued him as well.
Wow.
That one I think he actually lost or settled or something like that. So he's since stopped smearing, or wasn't really smearing. He'd be very critical about people, and people obviously don't like it when you come into their territory, even if it's honest.
I'm sure,
especially if it's honest.
Yeah, these are very rough numbers, but I think Planet 13 was, before the big run up it's had in the last year or so, was probably about a 200 million market cap.
Mm-hmm.
Which is, I mean,
how big
I'd
was
be
insider
comfortable
ownership? How many shares were actually out? Outstanding for sale. I wonder.
Don't know. I mean, I'd be comfortable talking about a company that size, but I have a tiny following compared to Jeremy.
Yeah. Oh, you're getting up. You're getting up there, Tom. You just wait.
Give it time.
Yes.
Tom's got the marathon following 26.2 last I checked, I think.
I like that.
Is
The
that-
marathon.
Oh, but that's
That's
miles, so that's not going to make sense for
Yeah,
you.
that was straight over.
Oh, we Americans. I'm on the same same
It's
wavelength.
like 40.
as Brad
It's like
here.
40 kilometers, isn't
Yeah,
it?
something like that, yeah.
Yeah.
42 Ks, I think.
There you go. I'm not much of a runner either, to be fair.
No, you're not built for running, Tom.
No.
Lifting heavy weights. What do we? Karan, you got anything else to say about speculation? You've been a little quiet there. Well, do you have any speculative holdings?
I think
Brown
the
was
closest to
busy buying
speculation
Bitcoin.
was...
Yeah.
Yeah, I was with Bitcoin Bro, just
You guys are chilling.
we're
for
discussing hardware wallets. Yeah.
lunch.
Yeah, I think the closest to speculation was my investment in Palantir, which I held for like 2 weeks.
Same
What
here.
was your thesis when you bought it? Was it just trying to ride the wave, or what was happening?
Yeah, it was just to figure out what this company does, and I still have no idea.
I put.
If anyone tells me that they know what Palantir does, bullshit. Like, no way.
I was in a
Does
security.
the CEO know?
I was in
Sorry?
a. What was
Does
that,
the
Tom?
CEO know what they're doing?
Surprisingly, he always avoids talking about the company. He talks about macro stuff. He talks about the company's aligned this way, and but never really about what's happening. So
It's very weird. Peter Thiel's involved somewhere there as well, isn't he?
Yeah.
yeah, he's a founder.
He's technically the richest person in New Zealand.
Is he in New Zealand?
Where he resides.
Oh yeah,
He's in New Zealand. I was in a securities law course in my last semester of school in the fall, and we were talking about direct listings where you don't do the traditional IPO, and that's what Palantir did. And the day we were talking about it was the day after Palantir did that, and it didn't really get a lot of news. So I thought, I'll put $100 into this, and I'll get back to it later. And a month later, it did 7x. So I'm like, I probably should have got to that a little bit earlier. So I sold it at almost a 10x gain or something like that, or maybe not that high, but it was a significant run up immediatay. So that was pretty funny.
Was this at $9 or something, right?
Yeah, I got it pretty close to that. I think it was well below 20. And I sold it not near the top, maybe the first top. It then went on a rocket ship again after that. So that was an accident.
Happy accident.
Yes, very happy.
Should we tackle some of the comments?
I'm looking at the questions right now. Let's see. I'm going back up towards the top.
We can get into Tom and Brad's speculative.
Oh, too bad. We're out of time.
Damn it.
Brad
talk about your 10x, Brad?
Yeah.
Your 10x investment?
The one that I thought was 100x, yeah.
Yep.
So early on, I got to be honest, I do have some FOMO around crypto and Bitcoin and all that stuff. So, Doge came across my radar, right? Elon is tweeting about Doge. So I'm like, all right, I'm going to put $100 into Doge, whatever. And it went, I think it was in 3 months, it went from 100 to 1,300. And I was like, no, this isn't supposed to happen. This is I should have lost all my money. Now this is bad because it's it's wiring me to be a gambler.
You got the bug.
But it was fun. It was fun. I sold half of it. I mean, there wasn't a reason for me to sell half of it. I was just I want to lock in a 10x with half. Just kind of go through that psychological process. And so I've still got half that is out there.
To the moon.
To the moon. To the moon.
Congratulations, Brad.
I mean, no, it was stupid.
The Dogecoin is the exact. It's just another fiat. That's what I don't understand the appeal. Other than that, it's just a pure meme. I guess that is the appeal because it's inflationary, so it's no better than fiat in that sense, and it's a crypto, so there's nothing behind it. So I just didn't understand why this? Why not? Of all the other cryptos,
the
you could have
Doge behind.
I know.
Yeah.
Well said, Karan.
Ain't power.
I like that Elon made an NFT of a Doge NFT. I don't know if you guys saw that, but
yeah,
it was
absurd.
Crazy. Yeah.
Oh man, that guy can make money from anything.
Yep.
He really can. He's very good at finding whether honestly or semi-honestly.
I'll tell you one thing I was randomly impressed by. It's a speculative investment for sure, but Logan Paul. So did any of you guys watch the Mayweather fight with Logan Paul?
I didn't actually watch the fight.
I watched him get knocked out. Yeah.
So before the fight, there's 3 Pokemon cards, so 3 Charizards in the world that are some type of rarity. I know very little about Pokemon cards, but there's 3 of these Charizards ever to exist. There was only 2, and one guy owned them, some guy from Texas, I think. And on some website that tracks it all, they suddenly said that there's this 3rd Charizard. And the guy that owns the other 2 offered $800,000, and no one knew who had this card. And then at the Floyd Mayweather fight, Logan Paul turns up with it around his neck. So now that card...
Oh, that's what that was. Oh,
yeah.
I read something about that. Okay, keep going.
That card is now worth, in my opinion, at least $1 million. Someone already offered $800,000 for it. So we know it's worth that. And now he wore it to a Floyd Mayweather fight, which one of the most viewed fights in history. Eyes everywhere on it. That is a genius move, in my opinion.
Yep.
He was also early on the NFTs and made a lot of money.
He
there
issued
too.
his own. He issued his own. And was big he's big in the Pokemon space as well. That's another, speaking of speculations.
Well, he kept his downside because he opened that first edition pack box like that he paid, I can't remember, like 200 grand for, but he was selling each pack for a certain price, and each of the individual packs added up to more than 200,000 plus whatever he made off his sponsors for that live stream that got like hundreds of thousands.
Oh sure. and all the new followers he might have gotten for all the ancillary like pack openings that the people who bought the packs got. I'm sure he got something out of that too.
That was low risk, high uncertainty.
He had something on his shorts as well. Some what are those codes called that you scan?
QR code.
The QR codes, but it was something to do with Bitcoin. So on his boxing shorts during the fight as well. So just making money moves, Logan Paul has been for a while.
Just one more thing on speculations and pumping things. I don't know if you guys watch CoffeeZilla at all. He's a pretty awesome channel. Covers scammers essentially, that whether it be scummy course sales or pumping cryptos, like whatever. Whoever the latest scammer is, he will expose them, and he does it in a pretty entertaining and funny way. But recently, Kim Kardashian came out with her own like crypto pump that she's sponsoring, and she's not alone in the amount of random endorsements that celebrities are now giving towards very random and very sketchy crypto investments, or just any investments in general. So the only lesson here is be careful out there, folks. If you don't know what it is, at least look into it and figure out who's running it or something like that. And if you can't figure that out, then maybe you should shy away. But I guess you kind of say the same thing about Bitcoin. But anyways,
another one I saw. Oh, you go, Tom.
Oh, I was just gonna say it's great. Like, these people are already so rich. Like,
I know.
Why would they risk their reputation like that? Is what I really don't get.
I mean, neither. I really don't. It's like, and it's so shallow too. It's like an Instagram post linking to some site, like an affiliate link for crypto, essentially. And yeah, how many hundreds of millions is enough for the family? It's just
it's not going to move the needle for Kim Kardashian.
No way. There's no way.
Yeah, it's never enough.
There was a rapper. I don't know who it was. I think it was Tiger, so I'm going to throw him under the bus. But they posted a tweet of pumping some tiny crypto, and he left in the tweet. He copied and pasted that.
Soldier Boy.
CoffeeZilla. If you post this, we'll pay you $20,000 or something like that. So
highly recommend anyone in the chat. Check out CoffeeZilla, and all you guys too. If Karan sounds like you watch him. Super entertaining and covers lots of just insane scams. All right, we should finally get into some questions.
Let's get into the chat here. I've got one. Would you regard buying over-the-counter stocks as speculative? Naspers, Tencent, for example. What's your take on that?
Well, Pershing Square is over the counter for me, and I would not consider that speculative.
Right.
Maybe slightly less liquid, but that doesn't mean it's inherently speculative.
I don't look at over-the-counter stocks because I can't get access from Australia as far as I can tell. So I would like to invest in over-the-counter, but so far I can't. But I don't think it's speculative. I think it's no different than any other exchange, really.
Yeah, it's a type of exchange, basically.
Don't you have interactive brokers?
We can't access from Australia unless you've done 100 different trades through the platform or something. Which
doesn't really work for you as a concentrated guy.
Not a punch card thing.
Hoping to do 100 in your life at
Doge
most.
Trading with Frank coming out soon.
Trading with Frank just to get his 100 punches, right? Is that true for you, Tom? Can you buy OTC stocks?
Not as far as I'm aware.
Okay.
No, it's never been an issue. Like, I've never had something come up that trades over the counter that I've been interested in buying. So I don't know the exact answer, honestly, but I don't think I can.
Naspers?
I mean, what I will say about over the counter is there might be some bad eggs that make their way in there, or inherently more speculative opportunities. But I guess you could say that about any exchange. There's going to be speculative, weird valuations, weird companies in there that you're wondering how are they even public. So it's the same as any other exchange is what I'd say, to what I think Tom was saying earlier too.
Well, my understanding, compared to like the New York Stock Exchange, there's just much fewer disclosures that are required, right, for OTC.
Correct.
Yeah.
The $100 million deli, if you guys remember that one. That's an over-the-counter stock. What is that still worth? What's it called? Hometown International.
There's certainly more risk, I guess, in the over-the-counter market, but I don't know. I wouldn't hesitate if I had access and found a company that I liked. There's a lot of nets that trade on OTC.
Hometown International is still worth $97 million on a market cap basis. Yes.
They're
Yeah, one
the
thing
best
that's
sandwiches. Yeah,
the greatest.
worth $100 million.
Crazy. Yeah, that secret recipe. I was just going to say, I don't know if this quite falls into speculation, but it just kind of popped into my head around, the over-the-counter conversation kind of got me thinking about it, which is that different countries have different levels of regulatory requirements. Mm-hmm. So, when Monish Barai talks about investing in India, for example, he says he's got to be careful, that he's not investing in something fraudulent, which you could argue, even looking at some of those markets is potentially a bit more speculative. You're kind of, you got to be more relying on accounting numbers being correct for most US companies is not even a thought that goes through your head, but it's something that comes up with maybe Indian businesses or China, perhaps,
or Turkey, right?
I think After Dinner Investor had made this comment earlier. I think this goes to that. My definition of speculation is inspired by Ben Graham and Buffett. Instead of intelligent investing, speculation is investing outside of my circle of competence. So perhaps you could argue that other markets with different regulatory environments, you might not be sure on what sort of due diligence you have to do. That's uncertainty. That's outside of your competence potentially. And it adds to the level of stuff you got to do, perhaps. I think that's pretty closely linked. I like that one. Yeah, thank you, After Dinner Investor, fair. Once again.
That's fair. And I'd say if something's outside your circle of competence, you can't really assess the odds anyway. So you can't tell if it is speculative or not, I suppose.
Well said.
Which then makes it speculative.
Yes.
There's a question from Jonathan, slightly up. How do I identify a company's moat? For example, how did See's Candy have a huge moat? Anyone want to take a stab at that?
Yeah.
This is
CEO.
This is very business dependent, I would say. And I think something I've probably started to appreciate more is that a moat is not a black or white thing. Like you don't just have a moat or not have a moat. There's sort of like a spectrum of moatiness, I suppose. So I don't know. There's a few different things you can look for. Like some people will argue you can see it in the financial statements. They have a higher than industry average return on equity or margins or whatever kind of return metric you want to look at. The other thing you can look at is what the business is actually doing. So Phil Town, for example, in Rule 1, I think it is, gives these like moat categories. So talks about things can have like a brand moat or a toll bridge moat or a secrets moat or a low-cost producer moat. So these are all different characteristics that some businesses may or may not have that can help them have better margins and outcompete other businesses in their sector. So I don't know that there's an easy answer for every business, but if you can identify a brand like Coca-Cola, for example, that can sell its products at a meaningfully higher price than its competitors without having customers churn off and buy Joe's Cola or Brad's Cola or something, then that's a moat. And that comes in different forms across various businesses.
I don't appreciate you talking down Brad's Cola, Tom. That's a real brand.
Yeah.
Yeah, I like
Brad's Cola, guaranteed to compound your portfolio.
Guaranteed better than Coca-Cola. I like the example Buffett gives of, if he had a war chest of cash, would he want to try to compete with Coca-Cola, right?
Yeah.
He could have all the money in the world. He probably wouldn't want to compete with Coca-Cola because it's such a strong brand. It's entrenched. So that's an example of a moat. There's also regulatory moats, right?
Yeah, there's definitely, like Tom said, a range of different types of moats that a business can have. Ideally, I'd like to identify an emerging moat, one that doesn't quite exist yet, but you can perhaps see they might have in the future, which is hard to do, and I guess moving towards that speculative side. If you want to be as safe as possible, you would want that developed moat. But even over time, that there's no guarantee that that's going to exist for the next 20, 30 years. I guess even something like a Coke, we can't guarantee that Coke's still going to be the brand it is today in 30 or 40 years' time. The further you go out in the future, the harder it is. But like Tom said as well, there are those metrics you can look at, like return on invested capital, return on equity compared to their competitors is probably a good place to start. Above average margins compared to similar businesses. I know for something like Kelly Partners Group that I look at, I won't go into all of it, but there's lots of different aspects of a moat I think they have, but probably biggest is their switching moat. If you are with an accountant, you're unlikely to switch to another account. So pretty much once they get that customer, there's really no reason they would leave unless, even if someone was offering something cheaper, I don't think that's enough to really get them out. You kind of just stick with, and long as they're doing the job right, then you just stick with them.
Yeah, and businesses can have multiple like moats, I guess. So Apple, for example, clearly has a brand, what Phil Town would call a brand moat, but they have like one hell of a switching moat as well. You know, they've got that ecosystem, and I'm just thinking like I use Apple Music, and I can't imagine how like draining of a task it would be to copy all my playlists and stuff across to Spotify or something. That would just be a nightmare. So I'm happy to keep paying Apple.
I think the weakest type of moat might just be not anything, but a financial moat. This is how I used to think Tesla had this humongous moat, and in some cases it does. But the way I was thinking is, they produce everything in house, or a lot of things in house, and they have all these plants that are expensive to build, but they were able to do it in about a decade. So what's to say that some other massive company can't come in and do the same thing in half the time with more money? So like a financial moat isn't really as potent as something like a brand moat or an IP moat, intellectual property, or regulatory moat, which kind of falls into that, like Brad mentioned. So different moats definitely have different strengths for sure.
Well, but low cost producer is a very significant moat.
Yeah, if you can get below that point and somehow have an advantage that some other competitor can't get to, or it's not worth it for them to go for it, then yeah, that certainly is a thing. Not saying it can't be strong, but of the types of moats, it's probably one of the weaker ones, at least in this environment where you can get money so easily with super low interest rates and so on.
I found that Buffett, the more I look at Buffett, the more I tend to see like low cost producer type businesses that he's invested in. So Geico is a good example of that, where they have the lowest cost auto insurance. What was the other one I was going to say? The Burlington Northern investment, I think, is actually a low cost producer type moat. Like rail is the cheapest form of transportation. If you're trying to get tons of goods from one side of the country to the other, it just beats the pants off trucking, for example. So they've got like the replacement cost of replacing all of the railroads of Burlington Northern would just be ridiculous. And they've also got the land and
land is the big one.
Right of way. Yeah.
Real estate's one of the few natural monopolies, because you can't create the same sort of piece of land. Because that's it. That's the space. You can't create it again.
Jack, have you heard of Mars?
Yeah, I know. I have thought about that, and actually with other things too. Like there's gold bugs sometimes are countered with like what if an asteroid full of gold like lands on Earth and just destroys the market, and what if we find another planet that we can easily inhabit? Like what would that do to the real estate market? Oh my goodness. Look at all the new land. But yeah, still, like each piece of land is unique. It's its own monopoly. Whatever rail line that is, you can't create another one just like it, because you can't create the same exact piece of land. So that's definitely a type of moat. And again, depending on the location, some land moats are stronger than others. But that's definitely a big one for rail for sure.
I think even Seritage, that's one of the huge moats that it has. The location of its properties
Right.
It's fantastic. Like,
because you can't recreate that.
The way the Sears buildings are, the communities around, it's
Karan, you cut out for a second. You're saying
in
it's got a
terms of
great
where the
moat.
Sears, where the Sears properties are located, the neighborhoods where they are, the average income of the residents around in that neighborhood. If you break that down, even for their best like 20 properties, I mean, huge moat in terms of what Heritage has.
Yeah, and even if it's not used for retail in some of these situations,
Exactly.
like it's going to have alternate uses.
Mixed use, that's the idea, right?
What do you guys think about Twitter in terms of speculative or not? I mean, it's this, dominant platform, right? But they haven't really cranked the monetization engines. So how does that fit in to an investing framework?
Brad, how addicted are you to tweeting or checking your Twitter? Tell me that.
You know, because
I know.
You like everything I post, Karan.
I'm as addicted to it as you. So
Karan is the world's quickest tweet liker. I found
really
within
is.
5 seconds
He
of me
really
putting
is.
something out. First like from Karan.
Yeah, but that's exactly what it holds a place in our mind. That's the intangible asset. I don't know
There's
a lot
lots
of
of
people as they
things.
see that. Yeah.
There's lots of things I like about Twitter, but you are right. Compared to some of the other investments I've made, if you're using that scale, it's more towards the speculative end, I guess, because I'm relying on the optionality of that company and I need management to be able to execute. So one thing, I don't know what it's like for you guys, but with your ads on Twitter, I get advertised for things that I do not care about whatsoever. So their ad stack is still very poor. So even just by improving that, the monetization is going to improve a lot.
Can I
But they are
ask?
switching to Google, right? They're switching to the Google servers.
I'm not
in
sure
order
how
to
they do it
improve.
specifically, but I know they've been actively working on it over the past 12 months to improve it. But I know personally on my feed, I get advertised things that are irrelevant.
Does Australia have strict privacy laws? Because the U.S. is lagging behind a lot of other Western countries in that respect.
That could be partly the reason. I'm not too sure. We do have semi-strict privacy laws, but
I wonder
probably
if it's
compared to you guys.
I wonder if it's different. Because I get pretty well-tailored ads in pretty much every social media platform in the
They've
US.
switched completely. Yeah, in the past 12 months, they've switched over to Google's services, and then they're just focusing on improving the ad stack, improving, the revenue and everything. Subscription
And that was a
model.
big part of the activists involved on board from Silver Lake.
Yeah.
That was one thing they wanted to see. And as far as I know and read about, it has improved. But I know personally for me, mine's still pretty poor.
I wonder if
But
that will
regardless,
change then.
There's a lot of other optionalities moving forward as well of how they can monetize and improve over time. And I think they're still spending a lot to try and develop. But I think in the future, it's hard to argue that Twitter won't be around and it should be a higher margin business, in my opinion.
Yeah, it's the same thing as brand, Luis. Reference to if it holds a place in our mind. Like people know Coca-Cola, right? People who are on Twitter are going to be stuck to Twitter. Like you want to know we all want to know when Monish Prabha has a new talk out, right? And he tweets that and we all get to that. So from Twitter, we're redirected to YouTube. That entire loop, it is brand, it is, keeps people addicted.
It also has a competitive advantage over other social media platforms in the fact, at least to me, I believe this, because it's interest driven. Like I know something like a Facebook that I used a lot as a kid, I've just slowly drifted away from that. Instagram, I've been on and off. Snapchat, I don't even use anymore. Twitter's the kind of one thing that I really consistently use, and I think it's because it's interest driven. The only things I see in my Twitter feed are pretty much investing and a couple of UFC and MMA things. So they're things I really like to pay attention to, and there's no reason I wouldn't want to look at it. Whereas on Facebook, my feed's clogged with things I don't care about, and that's typically the case with most other social media platforms.
What about your TikTok, Frank? How is that coming?
I'm yet to download TikTok. I refuse.
I'm sure I saw you dancing on there the other day.
Am I the only one on TikTok? I'm very sparingly.
Tom's on TikTok, right?
I have one TikTok from
you have
months
one?
ago. I was like, I'm going to give this thing a go, and uploaded one video, and never looked again.
I'm revamping. I'm trying again. I'm doing like B-roll of me walking around Chicago, and like I'll talk about some finance bit. We'll see what happens, but it's a different ball game over there, man.
Yeah, you just gotta pick the trending sound and do some dance to it, and you'll be viral in no time.
It is not all dancing, I will say. I think it maybe was at some point, and there is a lot of dancing in the 5 minutes per week I spend on it, but it's very different. It just seems too big to ignore. So I want to keep trying at least a little bit, see what happens.
I end up watching a lot through YouTube Shorts. That's the one thing I've noticed with YouTube Shorts is they're pretty much just TikToks. So I guess in that sense, I am watching TikTok.
There's a lot of recycling going on for sure.
Shameless cloning.
Trying to find a last question. Yeah, here's one. How do you back into the realm of fundamentals and not necessarily speculation? How do you keep an eye out for opportunities in your circle of competence? Like, do you guys have a watch list, or what's your method for doing that?
I have a. I'm not sure if it was Brad that said this, or not sure actually. But I have a list of what I would call great businesses that I would just buy immediately at the right price. So for those companies, I basically just have like Google News alerts set up, so I get an email once a week on what's going on with those companies. That's how I manage it.
I personally use watch lists on Ticker and now Coifin as well, which is a new thing that I'm using, which is similar to Ticker in a lot of ways. But I just have different watch lists for different purposes. Like I have my portfolio just to track through there as well. I have like my top 20 or so collection of random companies, and I have a high quality one, like Tom was just mentioning, companies that will probably never come into value, but I sit it there just in case they come in. I have a gaming one. I have a net watch list. So between those, there might be a couple of others as well. I kind of just keep an eye on all of them. Whenever I get time to research, I'll just dig into whichever one is at the top of the list at the moment.
Cool.
Yeah, I use my channel comments to just keep me. You guys, I mean, my viewers are just like, hey, did you see this? Did you see this? I'm like, this is great. I don't need any kind of notifications.
Yeah. I was gonna say, if you guys want a watch list, like just follow Brad, because not only in his comments but also his videos, lots of stock ideas coming through there. But really, if you want inspiration in any sort of investment ideas, go ahead and follow all of us. Shameless plug? Question mark. But I think that's a good place to wrap it up. And if you guys haven't already smashed that like button, I hope you do that right now. That would mean a lot to us. And be sure to subscribe as well. Also, if you haven't already, because that also would mean a lot to us. And check out the Discord, like I mentioned at the beginning, where we can continue the conversation over there about value investing and all good things personal finance. But otherwise, I guess we'll see you guys next week. And yeah, until next time, good talking with you.